What's going on, guys? We're going to be scanning for the next week, right? Obviously, this market has a lack of volatility, but we do have heavy data sets into Wednesday and Thursday, so this should be a more vulnerable week to be trading. Should be a little bit better risk to reward on any sort of directional trade, just because we've been in a market that isn't necessarily dominant from either side, right? We're getting a lot of short the rips and buy the dips type of scenario here, right? And that's going to kill a lot of people. The one thing that I was talking about in this call before I get started with the scan here, guys, is we have a lot of people that don't follow a very strict trade plan that has a very measured asymmetrical risk involved with it. What they more or less do is don't follow their trade plans, and then that results in them being at a very low probability for a win, first of all. Second of all, if you're averaging into losers, you're going to get smoked in a market like this that's very choppy. 2022, if you were trading that, this kind of reminds me of that general area. It's always important to follow your plans and to have really good risk to reward in a market like this, because you will lose and you have to embrace losing, and you have to understand that it's inevitable to lose in a market like this. So if you can embrace that and understand that and respect the plan around that, you're going to have bigger wins than losses still. If you're trading, the lower ranges correctly, the upper ranges correctly, your relative strength correctly, your relative weakness correctly, and you're being very patient around each and every single one of those tickers, right? You're going to get really nice wins in this market still, but you're going to lose. It's inevitable. So as long as your trade plan and your risk reward is really good, and you're stopping out at correct times, and you're not, averaging down into losers, and you're respecting your risk levels that your trade plan initially had, you will do good, right? But that's a very hard part of trading, and a lot of people can't do it. So that's the first thing I wanted to talk about. Second, QQQ. We actually had a decent looking sell here on Friday. I talked about on Twitter, I talked about in here. People sometimes don't like to listen. I don't know why. But my primary focus here on this week was shorting into the end of week data sets, right? Because we had a big time NWOG that gapped us down all the way into actually the previous week's NWOG. So this is where the previous week opened. This was Friday's close all the way up here towards like 529.50. We gapped down 10 points. Wait, what was that? No. Wait, what was that? How many points? 18 points? Never mind. I was looking at the wrong level. Yeah, so we gapped down 18 points here from Friday into Monday. And if you guys go take a look at the daily chart, that's a significant amount of volume. However, there's going to be a little bit of stopping volume within a candle that looks like this. Is it necessarily smart to really bet on the short side and short the hole and try and get all the way down to this gap here that extends into 508? 505.08. No, it's really not. What you're more and less better off doing is trading the relative strength throughout most of this leg back to the upside, right? And then obviously looking for the reshort opportunity on the top of the NWOG, which would be all the way back up into 530, right? And we took really nice advantage of this week. We swung some put runners over the weekend. Really fantastic gap down. Got a couple contracts that all ran over like 100 plus percent. I had like 160% on one of them. Pretty decent there, but I wasn't fully prepared, and I didn't put in a ton of money into the weekend swing. I was more or less short intraday on this day, right? But that was our lower high, and it left behind, a decent bit of a footprint here for potential distribution. And then we popped back lower and we formulated another NWOG into the new week. That was the gap down that we had puts for. And then it popped back down into defense of this week's gap, right? And it left behind the gap all the way down into 508.08 still. So all we know is that this built liquidity here for the downside, right? So if we were to ever have it still a dominant distributive looking chart from the upside, this would be our first initial target at 511, and we own QQQ puts right now. So that would be my initial target. However, the line in the sand here for this week, guys, is going to be 522.28. That's the top of this gap right here from Friday into, this is last week's new week opening gap, like the prior week's close, right? And then what we did was we built up like some higher low structure off of that area on the hourly chart, as you guys can see right through here. And then finally, what we did was we saw finally a new seller coming in that was of a little bit of size, still nothing crazy. If you guys go to the daily chart, this recent bid back to the upside was really drying up on volume into the Friday close, which was a decent bit of volume that was engulfing the previous 3 trading sessions, right? And the heaviest volume that we have in the whole entire range is technically to the downside here with, you have liquidity built off of 511, you have a major gap down, a lot of volume on that gap down, right? That was the phantom print that I was talking about off of this price action here on Friday, January 17th. That's actually OPEX day, where we had this 513 wick that was not traded in intraday, right? But we had a wick there. That's a phantom print. Price is typically going to pull into those areas, all right? And as you guys could see throughout this day, we actually had a big time gap up. So this was a gap to fill. That wick is not real. We never had any action actually traded over there if you guys go back and look. See what I mean? There was no trading action into that gap. However, the daily chart shows that. So that was a beautiful short side trade, right? And basically what I think this all is from the hourly perspective here is I think this is going to eventually just be a redistribution throughout the entirety of this range, right? Do I think it's necessarily ready yet? I don't know. And the character in the tape is very important next week because this is a relatively low volume week. Most of the volume within the range has already been fully absorbed because we've traded price action back through the entirety of the range on this huge volume gap down. And we've got 2 sell legs off of that area, right? So is all of the seller liquidity absorbed off of that area? I don't know. That's why I'm saying, like, sometimes you have to understand that, like, tighter risk after you're getting a little bit of leeway on a position is important in a market like this because, I'm green 40% of my puts. So why would I let this go underwater and get back above and then go for a UTAD that puts me 20 points underwater on those contracts? That's just dumb, right? I would rather just cut this out, break even, or for a small loss and then reevaluate this a little bit higher, right? So 522.28 is the line in the sand for QQQ, right? It really is. We have a lot of liquidity built from 511 down into 505, in my opinion. We've already absorbed a lot of the seller orders off of this unfilled gap from the Friday high as well as this Friday's high, right? So there's a lot of legs of price action here that already covered this move, right? Whenever we talk about imbalance on a chart, we talk about unfilled gaps. We talk about big time spreads on candles, like over here in these capitulation bars, right? We talk about, even sometimes there could be an imbalance with too much liquidity built at a certain area where a level has been tested so many times, and then there's no fuel from the upper ranges to the point where you have to draw lower to capture that fuel, something that looks similar to this off of 511, to then be able to sustain a rally higher, right? So, if there's no demand up here, what this has to do is it has to target the unfilled gaps. It has to target the areas that are a little bit more liquid on the chart. I don't know if you guys all understand the concept behind this just yet, and that's okay. But if you could start understanding these things a little bit more and how orders are collected and whatnot, and how the auction actually works in the market, it's going to really, really, really help you out with your execution process and whatnot. So that would be QQQ. So now we'll go through just the overall tech market. I have a little bit of Apple put still. This was a really nice day trade here on Friday that I took. I was actually sizing into this one throughout like Thursday with some time. The time is not the contracts of time aren't really up that great right now for me, just because my average wasn't the greatest. My first initial ads were around like 232. Right now we're at 227. So I'm up a decent little bit on these, but yet again, I would rather this be something where I take the risk a little bit off, and if we do get a leg higher, we could be looking for some sort of hourly lower high still. This whole entire range right here could be a buy climax. It really could, right? Where we get these gap downs, and this is our potential 1 week LPSY up here. So whenever you have a failure of displacing essentially with an aggressive seller that pushes price all the way back down to these levels and then maybe breaks and breaks through the 220 level and bases that and then moves its way lower. I'm not saying that's going to happen, and honestly, I'd be totally okay if that does not happen for my position. If we get a slight little gap down, I'll probably cover some. But what my primary trade plan is that I've talked to you guys about was, if you guys go into like my Joe Charts of Interest tab and you take a look at like what my Apple plan was on the schematic, it's actually playing out exactly kind of how I wanted to. It's just not the most perfect thing in the world. However, when we're looking at this from like the perspective of like just the retracement into the gap, it was absolutely fantastic. It really was. So, you know, when we look at that and I'm sorry, I just accidentally typed Apple. I just want to pull up the trade plan that I posted here for this one. Here it is. I found it. So when we take a look at this, guys, this was a very, 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 very well-planned opportunity here. We got our gap down. We knew that this candle was the LPSY. We knew it, right? That was the gap up that I said, you know, we should probably fade this on some 0 days just for the leverage on it. Liquidity driving events, as I've taught you guys, are what bring really crazy volatility to the point where it's okay to take a stab on crazy amounts of leverage with appropriate size. Those ran 1,000%. They actually ran 2,000%. I just cut early. I gave the trade plan on that the night before. I took a 99% loss on INTC, and I said, you know, these are both size for 0. I expect 1 to go 10 bags, 5 bags minimum, right? And we got that. So with Apple, this is what I posted. The lower high gap would have been off of the earnings bar gap down, the subsequent day of a gap down, which is technically where sellers are now aggressively and successfully closing this one beneath where the preliminary levels of distribution were taking place from. This is how, whenever I knew that this one was on just a really easy rally to the upside leading into the January OPEX, that was going to be a very, very, very easy sell back to the downside, is because sellers were playing relatively passive throughout this whole entire range, and there was a masked buyer or seller throughout all of this area, right? You had this shooting star, and then you had this really, really nice candle that was like failing from the upside, and then you get the December OPEX recovery back into the new highs, and then it just started breaking away on really low volume. So I knew something was brewing here in terms of major extensions when we're talking from a support bounce all the way up into here. That was 36 trading days and an 18% rally. I don't know if you guys are familiar with ATR extensions and whatnot, but that was a really nice ATR extension standpoint that we had all the way up here from the 50-day. That's sometimes a decent measuring tool when you're looking at like extensions to the upside on names that are extremely imbalanced, right? Trends like this typically are not healthy within the window that we're talking about. Technically, the breakout happened right here, leading into the strongest window of Vanna Charm, right? And once that flow obviously leaves, then you're going to get a really, really, really consolidated or sell type of move in the market, right? Especially in the mega caps. So the January chain and the December chain are kind of what we're front running the whole entire distribution. And then we got the LPSY into the report right after January OPEX and a window of weakness. So now what we're looking at is just that trade plan that I posted on the retracement into the gap. It didn't fill the gap entirely, but what it did was it failed the previous day high in a gap. So when we're looking at this from the perspective of a higher time frame swing trade, we can risk like 236, 237-ish on a lot of further dated contracts here and plan to accumulate all the way up into that. So it's a little bit of like a tough process to go through as you're building a position, and that's why you have to be very, very selective with your ads. I didn't get the ads I wanted to on this because it wasn't exactly the perfect schematic I was looking for. And sometimes you're not going to get that within a market that looks like this. And you have to look at the perspective of indices rather than just the equity itself, right? This was the range in which we would be looking for another sell off of, right? So With that being said, Apple is a decent looking trade. If we could get some inside bars or maybe a retracement back into that gap again on a weaker pop, then that could be a fantastic opportunity for downside. I don't know if that happens, and if we gap down, I'm going to be covering most of that trade. Really, 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 really nice hourly chart here that really shows off how the volume has been dominant to the downside. Right, we had a lot of volume on this earnings day sell, and then we had a lot of volume on the next following day's sell on this hourly, and then we've had no volume from the buy side that was retracing this into those bear gaps to collect more liquidity. So really, really nice trade opportunities over there. We go over to NVIDIA now. So with NVIDIA, there's no true sign yet. There's really not. Technically, this weekly candle is engulfing the previous candle. It's not the most bearish thing in the world. It's also not the most bullish thing in the world because we're in the DeepSeek gap, right? And I feel like a lot of people are really trying to time the bottom here, and they feel like they've caught the bottom, and there's going to be a lot of euphoria on this thing being in a major discount right now. But bottom line is that the chart's still sell side dominant from a higher time frame perspective here. I mean, this has been a distribution that's been occurring since all the way back here, and these volume footprints back throughout most of June and most of July, and then we started to fail the highs above us, and now we're getting crazy volume gaps to the downside, and I believe this is some of the biggest volume that we've seen actually ever since all the way back here on this day, right? So this is very, very big volume relative to the rest of the range. This might have been, something where they're distributing, and then what they're going to do is they're going to reaccumulate the lower ranges and then sell those ranges off again. What they do in a distribution is that itself. Whenever you have a true distribution schematic, nothing just plummets with ease. I feel like a lot of people get caught off guards with like trying to short the hole beneath like this earnings candle low, right? And all that really is doing is pushing into these unfilled gaps, pushing into a discounted standpoint when you're looking at like your recent impulse swing low to swing high. It's right off of the 618 on higher time frames, and it's right off of a gap fill. It's also right off of like where this daily support was actually at for a higher low before the grind higher. So shorting the hole down there is very, very dumb. However, we're getting the same look as kind of how we were getting within Apple, just retracements into those bear gaps on lower volume, right? This is very, very, very low volume, and the market's going to remain relatively illiquid. So I'm basically just looking at the amount of sellers that kind of step in off of this area, off of a back test of this previous support turn resistance. Also, you could pull fibs from this high to the low and start looking at your equilibrium range. If you want to take swing high, you can, but I typically like to take the recent impulse, meaning like your leg down and then your bottom of that leg down, and then start looking at the recovery. Technically, with the 618 from swing high to swing low currently is right off of 137.80, and then we have equilibrium off of 133. But when you're looking at this from a perspective of like respecting the daily areas of a support turn to resistance, this might sell hard this week. There's been no volume on this rally higher, none at all, and technically you could get some late shorts covering, in my opinion, and this can maybe have a little bit more room to the upside, but I want to see some sort of hourly buy climax happening where the higher highs are failing essentially, right? And then we start breaking beneath the range, and then we get retests and we start shorting lower highs. I think this is going to be a really nice reshort opportunity alongside some other names like TSM. TSM's been one of my favorite charts that we're looking at right now. I think that this is distribution. It's a 3 higher high schematic when you're looking at this on the weekly scale. We obviously had a lot of volume in this name at the upper ranges of those sell-offs. We had crazy volume up here on this really ugly looking bar, right? So I'll mark out all the volume anomalies that are telling me that this could be a distribution, right? And then we break into those new highs and we get a lot of volume with a weekly wick on that bar as well. And then we get some lower volume consolidation. We reclaim this previous swing high. We move our way higher. And then yet again, we're getting a lot of more heavy volume from the upper areas of the range at the higher highs, right? And if you go into the daily chart, guys, these are all basically really, really, really gross sell side patterns aside from this earnings report over here, right? However, we have bigger volume on this recent gap down. And technically what we did was we built up so much liquidity for, you know, a very, very crazy breakout level to happen around this area at 206.85 off this red level. And what happened was they marked this thing up on a potential LPS. This was a really nice trade that I took last year, or this year, which was an LPS right off of this gap fill potential, because I thought this was a reaccumulation. We had record high volume. When you're looking at this from a volume standpoint here, and you're looking at that day, that's a big time gap up of nearly 10% on the underlying, so we can conclude that that was a lot of buyers. Obviously, we could conclude now that that's could have been a big seller within that tape, actually, just because how we're failing the breakout levels. But when you're looking at this for the time being, it was a big time gap up. We had a lot of volume behind that gap up, right? And then what they did was they just put in another weekly higher low, and then they carried its way higher, but they built up a huge breakout level, right? So they built up a massive breakout level right around here at 206. And then they broke it out, right? But they broke it through, and then distribution continued into the new highs where they kept selling it, and they sold it off one more time. And when they made the new high, and your third higher high of distribution, they sold it off on record high volume on the name, right? This is the biggest volume that we've ever actually seen in TSM. When you're looking at this volume right here, which was how much? I think 68 million. There's never been 68 million volume traded on this, other than like maybe, yeah, nowhere to be found anywhere. That's very, very, very sketchy to me. So I want to see if news can hit this. I want to see what happens with this one off of like, now we're dealing with a breakout failure, right? So when you're looking at this on the weekly, you could see how this was a huge, huge, huge breakout level right here, right? Throughout most of this area. And then what we did was we gapped down, and now we're getting inside bars on the weekly. And if you go into the daily, most of that volume, like I said, is to the downside with this huge gap down, really relatively weak in comparison to the rest of the semiconductor industry here, with a 13% pullback on this name and the biggest volume that we've ever seen. So something's happening here. Do you guys have any questions about this chart? Okay, I'll go into the next one then. What else? I'm going to go into my charts of interest. I talked about some long side trades that I like. Okay, so if I end up flipping long, I think some of these semis look pretty good. I really do. Some of those being, I like QCOM, man. I really do. I like QCOM. So QCOM's a little tricky, but do you guys understand the schematic with QCOM, or do you guys want me to review this one?
Makes sense to me.
Yeah, it's pretty clear in my opinion. QCOM's it's a good upside trade in my opinion. This name's showing off a lot of relative strength in comparison to the rest of semis is what it's doing. They could play into the data sets. Yeah, so guys, if you guys don't know what Dom just mentioned in the general chat, I'll have to take a look at the economic calendar. However, when we're looking at this economic calendar, what do we have? Initial jobless claims in PPI Thursday, and we have CPI Wednesday. This is why I said volatility is going to return, because we've had a volatility contraction, and we're at upper ranges where sellers reappeared. They reappeared up here, no doubt about it, right? And now we're at the point where we're either going to get a more prolonged distribution, I think, where this can get a UTAD, obviously driven through these events, or we're going to get a recorrection, and I think a very steep recorrection to the downside towards 582. I think there's just going to be a lot of volatility. So this week's important to win. It really is. These weeks are very important to win. You have to have a lot of focus on weeks like this because I know there's going to be volatility. And you have to take advantage of those volatile moments in a range-based market. It's hard to say what's going to happen, and the Powell talks twice as well. Yeah, so you guys already know there's enough things going on here where there's going to be movement, there's going to be volatility, there's going to be vulnerable amounts of moves here in the market to make a lot of money on. All right, so NVIDIA, Apple, TSM have most of my focus here moving forward. Google's an interesting one. And when you guys look at the Google weekly, this is now looking horrible. It's looking really bad. And I think that this one's eventually going to go retest 175. Do we get a retracement into the gap? Or do we get a retracement into this swing high here? Or just into where this previous daily support was, right off the earnings candle low? Yeah, we might. Could that be a reshort opportunity off of those areas? I think it could be, because I think we have to pull into this gap. And we actually have not pulled into that gap. So I'll be looking at something going on with Google as well around this area, right? And if we want to pull a little higher, that's okay. And that's all dependent on how the tape trades in the next week. But I do like the other charts I've been talking about. So now we'll go into some of these other ones. Like, do you guys have any charts of your on your mind that you could throw in the chat, and I'll talk about after I talk about mine? If you do, then feel free to add those in there. But the ones that I talked about here, so where did I post these? China, of course. You know, we have a really nice move within China. It's getting a little too extended as of right now, but I think this looks absolutely insane to obviously have the potential to eventually retest the highs on the indexes here. The only China name that I've been on has been Baidu. Obviously, BABA looks insane, but it's a little too extended as of right now for me. And there is a delayed report there, so I'm going to hold those off for a little bit of time, but they could be a trade in the future. Roku. Roku's an interesting one. This would be a path of least resistance here on Roku. When you guys go to the daily chart, you could see how we have a major amount of unfilled gaps leading into that upside, right? We have a crazy amount, right? And what we've been doing is we've just been really consolidating this bull gap, which was technically a breakout. So right throughout here is what I'm looking at, right? And now we're trading above that, and we're trading a lot of relative strength above that, which is also relative strength above this daily breakout, right? I really like this chart. It's just I don't know how I feel about filling into this one, like on a breakout. I want to see what happens at these highs, though. I do. I want to see what happens up at 86.50. And then we have a trade in mind to obviously go target all the way up into 94. And you might think I'm crazy for this, but the bottom line is that it's relative strength in comparison to the rest of the market, right? You know, when you're looking at these schematics, there's so much fuel behind these that it's ridiculous, right? Like you have a crazy jump the creek area right around here, right? Like this daily level, and that's all breaking out from a lower low accumulation that was occurring throughout here in like the summer, right? Where you're getting like this lower low look, and then you're getting a jump, the creek, and higher lows on top of that. And now you're getting a lot of consolidation with relative strength here on potentially just a big reaccumulation range. We've already filled the gaps. We've already done everything necessary in terms of this obviously seeing expansion now. So whenever we're looking at a trade plan over here, we have a gap that extends all the way up into 94.50. And where most of the liquidity and where most of the buyers were sitting were at Roblox. And that name actually just got a big time gap down. And what it did was it gapped down into the bottom of this bear gap. And now it's trying to hold that as potential progress here from buyers. And when you look at this from like the weekly, it's a little bit of a neutral candle spread, but that's just because of the earnings. And this earnings bar could potentially be some sort of like, it could be like definitely like a footprint here. With that amount of volume traded and the consistency behind that volume traded throughout most of the day, right? I mean, this is the biggest volume we've seen on Roblox ever since all the way back here in summer of 2024. Which that type of volume, it brought a 22% mark down. And when you're looking at it from up here, this brought a 11% mark down. However, we had a really nice recovery. But whenever you go take a look at some of the other names, we obviously have Roku. That's a little bit of a sympathy to Netflix. Don't really know what Netflix is going to do, but I don't really care about that one. Roku's just that chart where if we could get some inside bars, that could be a fantastic path of least resistance off of like this 85 to 86.75 area. And then we would be looking for expansion into the gap. I think that could be a really nice opportunity there. And CPI tends to send these ones as well. So if it's a cool CPI, kind of like how we had over here, that could be a fantastic trade in my opinion. We just have to see how this one formulates throughout the rest of the week. So Roku's going to be on my list. I'm going to put that on my watch list here now. Oracle. This is another tech name. So much volatility, so many big moves on Oracle. Really nice, try on the short here, Carson and Lucas. I saw you guys talking about this one. Swing high, swing low, just like anything else. This is the retracement into the bear gap and into the golden pocket. But we also have a big time bull gap, right? So right now, what's happening is they're trying to defend the area of progress made from both sides. Buyers successfully close price above where they were trying to mark price up from, but we got a really heavy volume mark down, and we built like some relative equal lows that swept into the gap here at 152, 153-ish. There's a crazy amount of moves made here on this name, so could we see a lot of consolidation or just a slow grind higher back up into the closure of the gap? Yeah, and that's why this is more of a two-way trade for me. But I want to see if this level here at 172.50 can obviously fail with an aggressive seller, get that beneath there, and then like maybe we find smaller time frame retest to risk off of that for a swing trade. And then I would be obviously targeting more towards the bottom of the range again, or more towards like the low 160s. And that would be like a 10-point move on this name. And there's been so much volume traded here. And when you're looking at this volume from, I mean, it doesn't look like the cleanest weekly chart, and that's why it's not my top focus, but it's not the worst one in the world. We'll actually focus a little bit more growth to the long side, in my opinion. Zoom is another one of these names where you're getting a lot of consolidation within this really nice breakout candle here. Not breakout, but really nice strong candle here. And this is a high tight flag on the hourly, or on the 4-hour, I guess you could call it. Or on the daily, right? So we could use EMAs kind of to gauge where this thing's going to move off of. But what I would really like to see is something in discount that's well beneath the moving averages. So I don't really care about moving averages. However, what I would be looking for is like a retracement, and then I would wait for the momentum off of the retracement and then take a higher low off of that retracement and then see what we could do. Or this could be something similar to Roku, where this is just an easy little breakout trade. with a path of least resistance here. So all of these charts are digesting properly relative to, like I said, tech selling off. So my long side focus has to be in that area of the market. As far as like mega cap tech goes, we obviously traded Crowd last week because it was a relatively strong name, a relatively strong look. We had a lot of consolidation beneath this swing high for the breakout to be a very easy, vulnerable trade. And we have a lot of the other names in this sector going crazy. And some of those names that haven't seen the move yet would be like PANW. What PANW is doing is it was in a breakout failure above 188.15, and what this was like around whenever like Crowd recorrected, and this was been a relatively weak name. We have earnings, never mind, I can't trade that one. Okay, PanW's not on my list. TTD. So we're getting a big retest on TTD on the weekly. We have a lot of consolidation. We have a crazy amount of volume on this gap down, but that was a recovery. There was a buyer there, and now we're getting beneath that buyer, and there's so much liquidity built beneath that level here. So we have earnings as well, but if this name doesn't meet the implied move for that report, I feel like that could be another footprint candle for a continuation in a weekly higher low, right? So we have to wait for the report, see where that one moves into the report, and then see if it meets the implied move on the report. And then we would watch that for like a swing opportunity leading into the next week. Nike, I have no thesis on Nike. Didn't even take a position on that. That was a trade that was very much so I saw some of you guys trying to trade this or at least like thinking of it, and I was thinking of it over here, right? But bottom line is that we are retesting into where another lower high can come off of, right? This is why you don't want to be a trend line guy, because like yes, the trend line broke, but it doesn't matter about a trend line because it's still lower high structure, and it's still a retest into the previous consolidation range here, where the earnings essentially failed to move this one higher, and it was then eventually just a slow grind lower back into a new low that couldn't break into a new low and displace beneath these previous supports. And that's why this trade was really nice over here. However, now it doesn't really look too good, and we have to wait for like an undercut and eventually just a reclaim and a decent amount of consolidation that can result in this being a very clear spring. Like you guys were trying to catch like weekly, like a daily higher low, and there was no sign anywhere. Like there was just none. There was no buyer on any hourly chart. There was one for the time being over here, right? And then after that, there was nothing. So nothing yet on Nike, but what I would start looking for at Nike would be like if this one were to consolidate. Right now it's a waste of your focus, but if this consolidated down here and then eventually got above, it would be a trade back to the upside. But right now there's no spring, there's no nothing. What this more and less is doing is it's pushing into like, if you go to the weekly guys, it's pushing into like a big time weekly spot here, right around here. So what it can do off of the COVID areas, I don't know. And could this one build out an accumulation a little bit later on into the year? It totally could, but as of right now, there's no signs, so I'm not going to be looking at Nike. Starbucks, that was a trade plan that I already had on a, this was a bear gap right here. What it did was it pulled into the bear gap, got lower volume into the earnings bar. Kind of reminds me of like Crowd if you're looking at like the 3-bar structure. And it got like 3 days of consolidation, and then it just had more fuel for the upside after sellers were pretty dry off the bottom of the bear gap test to the point where you have to pull higher into the top of the bear gap. This is also where like a big like daily level was sitting, so that was a nice opportunity on that one, but I can't watch that anymore, so the risk reward's bad, so I'm gonna let that one go. Everything else has been pretty dry. I'll be looking at this weekly inside bar above this internal resistance here on LRCX to then go target 86.32 and eventually 92 at the top of the bear gap. We're just 89.50, which is the bottom of the bear gap. That remains unfilled. And this one has been building out really clean higher lows now ever since the 1, 2, 3 lower low. And now we're basically getting above that area of resistance that was failing to break through, failing the whole time, and now we're eventually finally getting enough consolidation above that for this to be considered a full absorption of that resistance. But we have to have the relative strength, and this one is relatively strong. Don't get me wrong, it really is, and so is QCOM, so is those two semis are my top watches here. MU is going to eventually be my top watch, but I told you guys this trade's not going to be good. I was never a big MU guy. I never thought this trade was crazy. Because it's gappy. It's really gappy, right? And we have a gap. We have a lot of liquidity here on a daily support 84, right? And then we have a gap beneath that to fill all the way down into 81.50. So, I think that will eventually be a really nice trade to the upside. Whenever this thing, if it pops down and they redistribute this all the way down into like 80, not even redistribute, but just bid it down into like a sweep of 84, collect those stops and those orders off of this huge weekly level, and then get back above, this would be a crazy trade to the upside to target 103. Look at the weekly here, guys. I mean, that was so much consolidation here on the weekly. No clear sign over there yet. And the smaller time frame reads, I would say QCOM and LRCX look a little better. McDonald's, I'll be watching this one in the report as well. We have an unfilled gap, obviously established from E. coli. Gap down, definitely an overreaction. And we have a lot of liquidity now here on this daily resistance off of like 302, 300, 303. I want to see if the report can even move us, because if it doesn't, that could be a crazy trade. But we have to wait and see. So yeah, I'm basically more short side focused right now than long side. And we already have some positions that have a little bit of leeway, so we can see what those do into the new week, and then we have to see how the tape behaves leading into those data sets, and what price pulls to leading into those data sets as well, right? Because if we get a slow grind higher into the data, I'm probably going to be re-shorting everything again. And then I'll probably start building a much further out expiration short side trade, so we'll see. But that's all I'm going to be looking at. My only other focus right now is going to be IWM. Basically, the reasoning behind IWM is that I think a change of hands could be happening ever since a failure of this previous all-time high. We're getting a lot of sellers, obviously, in the chart here now. It's kind of like the Apple schematic. It's the same concepts, but it's not the same looking schematic. We had a big-time breakout level here in the weekly, right? And then we broke through that. We pushed into new all-time highs, couldn't make new all-time highs. Now we're selling off and retesting those areas and obviously failing to get back above those areas on the weekly. And when you're looking at this from a change of higher lows into lower highs now, we're defending the FOMC candle. And now we're on the verge of potentially breaking structure when you're looking at this from like that weekly trend line higher low. If this thing somehow got drilled beneath this, like that would be a very bad sign for the market. I'm not saying it's going to, and this could catch on to a higher low, get back above that level, and then trade all the way back towards the top of the range, or towards some of these unfilled gaps, or towards like the areas of progress made from buyers, which is like 232.75, or you could maybe think about a target into 236. The more realistic target here would be above, like it would be a smaller time frame day trade if it got above all of this daily resistance. But yeah, we don't really know yet. And we have an unfilled gap all the way down into 219.72. But this chart doesn't really scream at me right now. I'm gonna watch it, but it doesn't scream at me. And then if the market wants to transition a little bit risk off in correlation with the tech distribution, I'll be looking at XLP or XLE. It's either consumer staples, and I see a lot of big extensions in consumer staples, like Cost and like Walmart. So I think I'd rather be on XLE. And basically with XLE, what I'm looking for here, guys, is just swing high, swing low, a recovery, and then a daily high or low off of this area. All right, guys. Well, I'm going to get going because I got some stuff to do, but that's what I'm looking at into the new week. It's not going to be the most fun week in terms of trading every single day, putting on a lot of size every day, but I think there could be a few core positions that make multiple weeks worth of profit just because of the data, just because of POW, just because of CPI, PPI, initial jobless claims. All of that together can tie really nicely into sparking a little bit more of a market rotation. If tech wants to sell, and then we see some relative strength under the hood from that tech sell. So that's what I'm looking at, and I will see you guys later.